Help me, Rhonda. Is Crest Capital like a bank?
Actually, Crest Capital is better than a bank for a certain type of financing. Specifically, we're better at fixed asset financing, assets such as equipment, vehicles, and software. There are a number of factors to consider, and there are some very real differences. Difference number 1, simplicity. A bank will require a complete financial package consisting of several years' business financial statements and tax returns, as well as your personal financial statement and tax returns. Their credit approval process is extensive, looking at many different financial ratios and financial trends of your business, and often takes several weeks for a bank to approve or decline you. An equipment loan or lease from Crest Capital is generally easier to obtain. We routinely approve up to $150,000 with a one-page application, and our process only takes a couple of hours, not days or weeks like a bank. Advantage, Crest Capital, easy approvals. Difference number 2, upfront cost. A bank loan usually covers only 80% of the equipment and none of the soft cost, leaving you with a problem. Where are you going to come up with the other 20 to 30% cash to put down? Crest Capital provides 100% financing. Even soft costs such as sales tax, shipping, and installation can usually be included. Your cash reserves are protected. Advantage, Crest Capital, less cash out of your pocket. Difference number 3, collateral. A bank will file a blanket lien against all of your assets now and hereafter required. So in essence, a bank is cross-collateralized with your kids' trust accounts, your personal accounts, and everything else in the bank, plus your house, your boat, and all your other assets you own. Technically, once you sign that bank loan, you can't borrow against or even sell those assets without the bank's specific permission. Crest Capital simply files one UCC financing statement on the specific asset we're financing. You don't have to ask us for permission to run your business finances the way you see fit. Advantage, Crest Capital, no restrictions on you financially. Difference number 4, compensating balance. The stated interest rate on a bank loan might appear to be lower, but you're required to keep, 30% of the loan amount in compensating balances in an account at that bank? So the bank is really only lending you 70% of the money. 30% is your own money. If the bank's stated interest rate is 7.5%, but you're required to keep 30% of the loan amount deposited at the bank, a computation of the real yield is nearly 19%. Compensating balances not only provide the bank with an inflated rate, it also ties up your most precious asset, cash. Crest Capital simply finances the equipment. We don't put restrictions on your bank account, and we're not lending you your own money, making Crest Capital quite a bit more cost-effective for you. Advantage, Crest Capital. Bank's perceived interest rate isn't the total cost to you. Difference number 5, financial statement covenants. A bank loan contains restrictive financial covenants that require your business to maintain a minimum current ratio, a maximum debt-to-equity ratio, and no consecutive quarterly losses. What if your business hits a bad spell? Can you afford to repay the loan when the bank suddenly decides to call the loan earlier than the end of term? Financing fixed assets with Crest Capital means less red tape and micromanagement of your lease or loan and a whole lot less worry. Advantage, Crest Capital. Why risk the bank demanding money back in tough times? Difference number 6, preserving credit availability. How do you know what opportunities or challenges tomorrow will hold for your business? Crest adds another source of credit, allowing you to preserve your bank borrowing capacity for other needs, a fact which is especially important right now. Banks establish a maximum borrowing limit for your business based on standardized financial statement ratios. The total amount of money that you borrow, whether you borrow from just one bank or several different banks, is applied to that lending limit and therefore reduces your availability of future borrowing from any bank. Considering the fact that the number one reason businesses fail in the U.S. is insufficient capitalization, tying up your bank borrowing capacity for equipment acquisitions may very well have an adverse effect on the ability of your business to succeed. Advantage, Crest Capital. Stay prepared for the unexpected event, good or bad. Difference number 7, hidden charges. We all know all too well that banks find ways to fee us to death. Enough said. With Crest Capital, you have no compensating balances, no teller fees, no unexpected closing cost, no annual renewal fees, and no blanket liens or other restrictive covenants that banks use to increase customers' cost. What you see is what you get with us. Advantage, Crest Capital, no nuisance fees. Difference number 8, accounting and tax. Banks prefer to lend to you on a revolving basis rather than a fixed-term basis. This is very good for the bank and potentially very bad for you, the borrower. If you use revolving credit to finance fixed assets like equipment, vehicles, or software, or if your loan has to be renewed annually, and all bank loans do, the entire balance of the debt must be accounted for and therefore reported on your financial statement as though it were a current liability rather than a long-term debt. This can have a disastrous impact on how your balance sheet is interpreted by creditors reviewing your financials. Crest Capital will finance your asset on a fixed term, and only the current portion of the long-term debt will be reflected as a current liability on your balance sheet. Additionally, if your lease or loan is properly structured, you minimize both sales taxes and income taxes on your business. Advantage, Crest Capital. Maximize your financial statement, minimize your taxes. Difference number 9, rate adjustment. Banks would much rather lend on a floating rate basis rather than a fixed rate basis. This transfers the risk of interest rate fluctuations from the bank to you. And that's why bank loans are typically indexed to a market rate and therefore are subject to rate fluctuation, making it tough to budget as your payment gets higher and higher, especially given the current economic climate. Anyone remember the 70s? Standard loans and leases from Crest Capital are fixed for the entire term of the agreement. Advantage, Crest Capital. Fixed is good. Difference number 10, requalify every year. Bank loan documents cause your business to have to requalify for the loan each anniversary period by providing financial statements at least annually. If you read a bank loan agreement closely, you're forced to agree to provide the bank with your personal financial statements and tax returns, insurance certificates, accounts receivable agings, inventory schedules, and other certificates, etc., at any time the bank sees fit to ask you for the information, or the loan is called if these provisions are not complied with. For each of these financial statement submissions, your financial ratios such as minimum current ratio, maximum debt to equity, and minimum cash flow coverage are evaluated. The call provision allows your bank to demand that you pay off your loan if your business isn't doing as well as the bank thinks it should. Additionally, if the bank is sold, if they decide that they no longer wish to support your industry segment, or if they simply wish to lend the money to somebody else, they can call your loan. Where does that leave you? Crest will leave you alone if you are paying as agreed. We're right here for you when you need additional equipment financing or an upgrade, trade-in, or replacement, but we won't ask you to requalify for the loan we already gave you. Won't you sleep better at night knowing we will not bother you for the next 5 years as long as you make the payments as scheduled? Advantage, Crest Capital, no worries. Have you really read the bank loan documentation? Really? I've given you 10 solid reasons why it's smarter for you to finance equipment, vehicle, and software with Crest Capital. Call us at 800-245-1213 or visit us at www.crestcapital.com.